for the job market and for the economy overall. So we've got a couple smart people with us to discuss that. Cody Willard, who many of you know, he was here with us last year, is the editor of Trading with Cody, where he posts all his stock and option trades from his personal account. He's also the chairman of Scootify Apps and the principal of CL Willard Capital. Cody was on the Fox Business Network for a long time, as a former hedge fund manager. And what else should we know about you?
I used to have a 41-inch vertical jump. I could dunk like nobody's business.
Exactly.
Walk on at University of New Mexico many years ago.
Down to 39.
It's I barely grabbed the rim right now.
And we have Michael Coe with us. Michael's a 20-year veteran of the financial services industry with broad experience as a strategist, analyst, portfolio manager, and proprietary equities trader, commodities and index derivatives as well. He's the co-author of The Options Edge from Wiley 2016, a comprehensive guide to understanding the value of options, optionality, volatility, and strategy for retail and institutional investors. What else should we know?
I'm also a partner in an AI company in the fintech space. I'm not one of the brainiacs that we have. We have 5 PhDs on staff who came from an AI research group at Imperial College in London. For those who are not familiar with Imperial, it's sort of the UK's version of MIT. They focus on a specific branch of AI, although we deploy 2 of them, which we can get into in greater detail. But I'm a true believer that a lot of the things I used to do are going to be displaced by non-organic intelligence. We'll call it that. Artificial seems to have a negative connotation at it sometimes. So I'm obviously a believer because I'm trying to promote it basically to take my place.
So just to start at a broad level, is it really different this time? Is artificial intelligence real? To go back to your metaphor, is non-organic intelligence this time? Is it real? Is it just the new name we have for software and sophisticated analytics? Or what do you think?
Well, I do think that AI gets thrown around a lot, and obviously we have a lot more computing power than we once did, so we have more powerful calculators, right? But a powerful calculator, I don't think, is necessarily what people think of when they're thinking of intelligence. I think what people are thinking of when they think of intelligence is learning and problem solving and inferencing. And I'm not sure that prior efforts in AI were able to crack those very well, but certainly the techniques that we have now do those things. And whether you're aware of it or not, a lot of us are already experiencing some of the benefits that can provide. So I don't know how many people by show of hands came from somewhere other than Dallas, maybe flew in here. Did anybody fly in here? Okay. So, those of you who flew in today probably benefited from how some of these techniques have been applied in mission critical systems. Our team, before they started tackling the fintech space, was working on optimizing flight schedules. That may not seem like a really big problem, but it is, because you have these routes and slots, and there's a very small window of time that you can adjust on each one, right? And you're trying to move a lot of people around the world, and there are different things you're going to try to optimize for, right? So you want to say, well, how can we do this? How can we get everybody where they want to go? How can we use the smallest amount of fuel? How can we deploy the fewest number of planes? And that was a problem that really didn't get solved until relatively recently. And these techniques were used to do that. You have situations where there are so many combinations of possible things that could be done that you cannot solve it with a calculator. You cannot solve it with brute force.
So this was sort of one of the oldest problems in linear algebra, right? Or we call it the traveling salesman problem, call it the flight coordination problem. whatever, and it had always been a complex issue. And you're saying that these new methods actually improved on what we had been able to do.
Yeah, the primary reason that they were able to do that is because, like I said, the number of combinations can be truly explosive. So I'll give you an example. One of the problems we tried to solve, there are 3 times 10 to the 30 possible combinations, which would be like trying to find the perfect grain of sand on all of the beaches of 400 billion Earths. Or if you measure the age of the universe since the Big Bang in nanoseconds, and then multiplied that number by 10,000. And to really think about explosive numbers, think about the number of atoms that are in the universe. Right? So we are not quite to that scale, but now we're talking about 10 to the 78 or 10 to the 82, probably in that range. So maybe a little less than the square root of that number, I guess, or between the square and cubed root of that number. These are big, big numbers, and you cannot do it with brute force, certainly not with any relevant amount of time. Right? So we're trying to solve problems. The previous speaker was talking about how important time is. We're trying to solve it so that we can use it. Cisco had a similar problem. How do we build enough network infrastructure as mobile telecommunications began to explode? How do we build enough of that that when you make a call, someone can pick up on the other end, but not overbuild? We never really know exactly what our demand is going to be. And this same technology was being used for that. And the way that gets solved from technology is inferencing. You have different types of solvers, different types of algorithms working on problems and sharing that information with each other, which is kind of how our brain works.
Cody, I want to talk about how you're applying that to the financial world. But first, Cody, what do you think about this basic question about whether this time is different? How do you think about AI right now?
Yeah, I was glad you actually asked me that too, because I remember probably 25 years ago, I was in college at the University of New Mexico, jumping really high. And my best friend quit his job to move to Austin, Texas to become a part of a company called Cycorp. I don't even know if they're around anymore, but he was buying into the artificial intelligence revolution 25 years ago and upended his life to move to work on it. Spent probably 15 years at that company and they never broke through. I don't even know if that company's around anymore, but my friend does now work on artificial intelligence at a major global company, spearheading their efforts in doing things like minimizing downtime for all of their 80,000 employees. That is real, and it's being applied here right now. There are tens of thousands there are millions of new jobs being created around the world, and it is only exponentially going to grow. There are more and more applications for artificial intelligence and more ways to use the artificial intelligence, and it is still such a new facet in our economy. It doesn't really even exist yet. So yes, it's real and it's burgeoning, but there's 100 years worth of revolution to happen around this.
Michael, tell us a little bit about how you're using the technologies you described in the world of finance.
So I mentioned 2 different branches of AI. I think the one that most people are familiar with is deep learning or machine learning. Space and big data, basically, where you can take massive amounts of data and essentially begin to learn things about it, features about the data that are relevant for decision making. So that's one part, but that's really the input side. The technology I was referring to, combinatorial optimization using hybrid algorithms, essentially what we do is we take those inputs and then try to proactively identify the best course through an uncertain world. So given the world from the world of options, which is where we spend most of our time, there are, for any underlying security, like let's take the S&P 500, there might be 22 to 2,400 individual options you can trade on that instrument. You could buy one, you could sell one, or you could buy any number, sell some others. There is an explosive number of combinations of things you can do. And some of them are directional, meaning that you have exposure to whether the S&P rises or the S&P falls. Others are volatility based, meaning that as the S&P rises and falls, you may make or lose money because of that. Some of them are based on the market's expectations for those behaviors. Others are related to the future dividends of all of the underlying companies. Others are related to things like interest rates. Okay, so all of those things are things that we can have an idea about how they might behave in the future. It's unlikely, unless you have access to some inside information or a crystal ball, that you know any of them with certainty. So how, with all of the possible ways that you can combine these securities and all of the different things that could possibly happen, how do you know that you have identified the best course through? What's the safest strategy? What's the one that has the highest expected P&L? What's the one that has the lowest volatility? Now, usually we use heuristic approaches to solve those problems. You go to somebody who's been a derivatives trader for 10 years, someone like me, presumably, and say, well, you know, you've seen a lot of different market conditions. You were there during the Russian fault. You were there when long-term capital management failed. You saw the tech wreck. You saw the credit crisis. You saw September 11th. You saw all of these things. And over time, your intuition might give you a way to behave through this. But really, it's my intuition and my best guess. Is there actually a correct answer? And that's really only something that machines can solve. And that's what we're trying to do.
And I would say, I don't think machines are going to ever solve that. I don't think that machines will ever, I don't think investing in machine learning and investing in trading that's done by machines, I don't think that's something I'm ever going to want to do. The instant there's an edge, it's gone. You can't stay up with that. The other machines will learn it too. The other systems are going to learn it. If there's actually some way of breaking that system down into some mathematics that you can maximize your risk reward, it instantly disappears because of the other machines that are doing that simultaneously.
So I probably would have to contest that, but I'll give you an example. Okay, so last week we have a associate in London who is working with an AI company in Singapore, and I don't know these people. I have no idea who they are, but what I do know is that they have claimed that they can make predictions about the future prices of stocks in a statistically significant manner. So not guaranteeing that Microsoft's going to trade at a certain price, but they can make predictions that are more meaningful than rolling dice or flipping coins. Okay. Well, look, wait, hang on.
I'm saying no.
Okay. Jim Simons would also disagree with you, the founder of Renaissance Technologies, and I think his fortune suggests he knows a thing or two about the markets, and his 100 PhDs. But let's leave that aside. So we were interested in, finding out about this, but this investor said, well, I'm going to give you the predictions that they make, okay? Because I'm interested in trying to figure out whether there's a manner that we can follow the bets that they're making, but do it in a manner where if we're right, we make more money, and if we're wrong, we don't lose as much. Because our finding is that the rates of return that we're achieving are maybe a little bit better than the market, but it's very hard to deploy this. So we're getting only small amounts of edge. We want more edge than we get. Can you find a way to put on trades? So here's how it went last week. So on Sunday night, they gave us the price predictions for last Friday. And they were statistically meaningful. So if you had traded equities based on their predictions relative to the market, you would have made about 4.5%. We had to return to them the trades that we would have done on that same set. Those trades last week in 9 securities made 36.5%. Now, and by the way, the optimization is a mathematical proof. It's not a question of whether or not, and this is not a guarantee of a win, right? So I want to make a point that you can find. I'll give you a very simple example. Okay?
I got to interject. You just brought up LTC and long-term capital management, Black-Scholes, the whole concept that you could mathematically figure out best risk-reward scenarios. And that's exactly what ends up happening in that scenario too. There will always be the black swan that the computer systems did not generate enough. And it might have worked last week, but over the next 10 years, there will be at some point a break in the system that will wreck all of the underlying artificial intelligence type of machine betting that's happening underneath that system.
Well, first of all, I'm not going to say that risks don't exist. Long-term capital management, by the way, was not using the skills of Scholes and Merton necessarily. They had some very smart people on staff. They had 2 Nobel Prize winners. But essentially what they were engaged in was a not very sophisticated carry trade.
And I'm saying,
So-
I would think that
so
we'll
they
look back
were
in
not-
50
they were-
years and say that
They were
The-
not deploying
the
the tech, they
idea
were not
that
using the models.
this
But
is
that's
the
not-
same
that's
thing
not-
we're at
but
today.
I'm not
In
talking
30
about
years,
models.
we're not gonna look back and be like, boy, those guys had it figured out now.
But I'm not talking about models. I'm talking about something a little different. Okay. So I'm going to give you, I'll give you an example that'll make it a little bit easier, sort of bring it down to size. Okay. So we're going to imagine for a second that we have a die, right? And it's got 6 sides, and we can play a little game with this die, right? And the game is going to be that, you can bet on this, and if you win, you pick your number, you're going to get $6. Okay. The thing is about this, that in this game, it's not the same price for every number. Okay. The probability of landing on any one of them, assuming that the die isn't loaded, is the same. It's 1 in 6. But maybe in one case, you can find the 10-cent bet. In another case, it's a 50-cent bet. When you roll and you get the number right, and you bet your 50 cents, and you win your $6, okay? That's obviously a very good bet. That might not have been the best one. What if I said you could bet $3 on a number? Well, if somebody picked the number and rolled it 3 times in a row and doubled their money every time, that doesn't necessarily mean it was the best bet. The best bet is the one that has the best risk reward, regardless of whether or not you win or lose. This is not a guarantee of winning. It's simply trying to find the best way. Here's another example. You guys probably use this. Your navigation system, right? It used to be in London, they had something called the knowledge. The knowledge was basically an incredibly rigorous test that London taxi drivers had to undergo, that they really knew the city, right? And hopefully they have the experience to know which way to go and when. If you ever went to New York and you'd never been there before, you hope you got a taxi driver who knew what he was doing. Should I take the Lincoln Tunnel? Should I take the Holland Tunnel? This is assuming you're going to New Jersey. If you're coming from JFK, should I go through the Midtown Tunnel, Triborough Bridge, as they used to call it before it was RFK? What's the best route? What's the best time? These were things that humans were theoretically good at because you could assemble all of this different information. Now you use Waze or Google. Why? Well, because it has information that humans can't possibly digest fast enough, right? They'll know if there's a crash. They'll know if the bridge is closed, whereas the driver may not. That doesn't mean you're going to get from JFK to Midtown Manhattan in 15 minutes. It's not going to happen. But you're going to be better off using it than not.
I'm going to argue every time. You're not. Use your own brain when it comes. I think the biggest difference with your GPS analogy is simply that the locations don't change. They are where they are. Money changes, economies change, technologies change, people change, who's running those companies and making the decisions at those companies all change. And every time you buy any security, whether it's a bond or a stock or something, there are underlying people making decisions that ultimately make the only thing that matters, whether you get paid back, whether you get that return on that money. And no system can tell what's going on inside the C-suite at Cisco.
That's actually a great point, because we had a hedge fund approach us on another optimization problem for trading retail stocks going into earnings. And again, it was, we have information about the way these stocks are going to behave. We just want to know the best way to do it. Do you think it's possible that they could be getting information using technology that the average investor doesn't have access to? Does anyone think that might be possible? I mean,
Doesn't mean the information is valuable or worth anything,
Well, let me
but
give-
yes, you can have more information.
okay, so let me give you
absolutely.
some examples of the kind of information they had. They had satellite images of the parking lots at the stores and malls, and they had bought all of the credit card data from Visa, MasterCard, and American Express. They knew every dollar that had been spent in those stores during the last quarter. So earnings were going to come out. Some people were going to be surprised by the results. They weren't really, because they already knew how much had been spent.
But that's a form of sort of
That's not AI.
fundamental analysis.
That's right.
Not-
That's not
Well, and
quantitative. That's not
to
AI.
the point too,
My point
when you
is-
trade earnings, you also have to guess whether the market has expected the same thing, that your data, that your information, if you've got all these satellite images, well, did the market expect the quarter to be terrible anyway?
Now
Well,
you're
guess what?
getting
Now
into
the stock
where
goes
AI
up
is gonna play the role.
15%,
That's right.
or not.
Well,
Which
you
is
know,
a good, I'm actually glad that we're sort of on the other side, opposite side of the discussion here. It makes it more interesting than if we're both just up here going, buy NVIDIA.
I totally.
Which, by the way, I own NVIDIA, but that's a different topic.
we use Intel cores for our
I own
work, but-
Intel just as of 2 weeks ago, but
This is a great conversation about how it's going to affect finance, and I'm glad we do have two different perspectives. I think they're both smart perspectives.
I agree.
Let me broaden the conversation just a bit, because AI is going to play in a lot of different areas. AI might be the most impactful, because obviously other areas of the economy aren't necessarily zero sum like a lot of financial markets.
Well, you know, George, the great George Gilder was just up here speaking before us, and I always hate following up when George speaks. It's one time I gave a speech and introduced Wozniak to a crowd, and that was terrible too. I mean, you know, I'm Cody Willard, I'm nobody over here. George Gilder was just up here talking to you guys. Listen to him, even though I think Bitcoin's in a bubble right now, and you'll get a better chance to buy it. I've owned Bitcoin for 5 years too, but I'm selling it right now. The point being, look, I think it's all about time. That's what artificial intelligence applications, what they will be doing. We're all going to save time everywhere you go. George was hitting on these themes in a different topic, but he was talking about artificial intelligence too, in that when you go to the store, I just want to save time. I don't want to be in a line. I want to purchase things faster. I want to leave faster. I want to save my time. And artificial intelligence will continually do that for us.
What do you think? Beyond finance, where are the biggest near-term applications?
Well, I certainly hope areas like healthcare. I mean, one of the problems that we have is data. So it's controversial to, you know, in order to do some of these techniques in the healthcare space, you need to be able to, you know, deploy techniques that have access to massive amounts of data. So sort of epidemiology, if you will, on a grand scale. And I think a lot could be teased out for those types of things. But unfortunately, I'm not 100% sure that the data is there. It is an area, though, that I think would be one of the most meaningful.
Maybe the better question would be, is there anything that's not going to be impacted? Can you name industries that won't, over the next 10 years, have artificial intelligence, something
I think
applied to it to ratchet out more
This gets back to
time?
Michael's point, which is how much of AI, obviously machine learning, big data, et cetera, the resource you need is data, right? Now, there are other certain things, what we call them neural nets. You have other different types, subsections of AI that work in different ways. But that's one reason why a lot of people think that it can't achieve sort of human-like qualities, is because we make so many decisions, good or bad decisions, or behave in ways that aren't necessarily, that don't have a lot of data behind them. We operate in even realms of bigger uncertainty. You're in a realm, finance, that is inherently data intensive, and that's great. So are there ways that it can apply to across the board without data, or will that be a specific limiting factor?
Well, like I said, one branch of ours is designed to deal with uncertainty and try to navigate through it. So you don't know the answer. You're just trying to take what you think is the safest course through. In other cases, you basically have done some analysis and you have an answer.